everybody. I say it's good evening if you've been short this market, which fortunately we started shorting a couple weeks ago. We're just kind of rolling the portfolios over from predominantly long to getting 50-50, and then up until A's, we could see where you wanted to be short in the NASDAQ and the S&P stocks, and didn't want to be short in the solid, we'll say the Dow type stocks. So kind of a good stop loss timely session in that there was lots of good examples today of when you should have come out of positions or had your stop losses, and that's why I've kind of put in the morning comments to definitely have your safety stops in place. And a lot of people ask, well, how do you know where to put a safety stop? Very simple. Where the trade shouldn't be trading. So the first rhetorical question is, what is the function of stop losses? Well, most people's answers are going to be that it prevents taking big losses. It protects your capital. That's the functional aspect of it. But more importantly, and this is the more important part, is that it keeps your mental control of your trading. Because, and this is the voice of experience, that if you turn around and all of a sudden you've got a position that is backed off tremendously and you didn't have a stop at the right place to stop out, what's our first mental process? Well, we sit there befuddled and say, shoot, I don't know whether I want to, this is down so big or this is down where it shouldn't be trading. Do I want to sell here, or am I going to look foolish by panic selling here, and then it pops back up? And then you sit there and it goes down further, and you think, man, I should have sold out when I first thought. There you go, Jay. That's about it. That this couldn't be happening to me. Things are going to bounce back up. So what that does is that puts you in a situation where you are not mentally working. You're hoping. And so once you decide where to put the stop in, which is usually, that's right, you want to double down. You want to buy more because if it does pop back up like it's supposed to be doing, you're going to make more money. And then it continues to go down. So this is the main function of having stop losses, is to put the stop in at a level that it shouldn't be trading. And I hear so many people say, well, I was advised that you put your stop loss at 3%, 5%, 7%. The market doesn't give a hoot what you think is a good stop loss. What the market we should be analyzing is the price moving in a direction that alters what we initially thought as far as based upon candlestick charts? Are they moving in the direction we expected it to be moving? So the third aspect of it is that if you can maintain your mental control by stopping out, now you have those funds available to put back in a positive use someplace instead of sitting there trying to figure out what to do with this bad trade. You're already moving on to something else. And so we often hear how every money manager tells you, cut your losses short and let your profits run. And I've been in the business so long, I still have not ever heard a money manager tell you how you cut your losses short and you let your profits run. As a look at a candlestick charts, it becomes very easy to say this is not doing what it's supposed to be doing, our expectation, if you use the 1 minute chart, Thomas, no. If you're using the 1 minute chart, you've got to still know what your fluctuation movement should be, which might be that as long as you're 1 minute pulling back to make a 5 minute chart, let's say, start to go negative. And I guess if you're going to trade that fast off a 1 minute chart, yes, you better set your parameters of if this is going to move up on a 1 minute chart, where is the level that it shouldn't be trading on a 1 minute chart for a day trade? Yeah, it probably doesn't fit a 1 minute chart. Yeah, Carrie, that's, yeah, you hear all these people on financial news stations say, yeah, I'm going to buy this if it pulls back. I wouldn't buy Tesla right here. I'll buy it on a pullback. Well, how far is that pullback? If it pulls back 3%, 7%, 80%. So here's the one thing that you always have to keep in mind. If you've got the best trading system in the world, which cultivating through everything that I've seen over the last 40 years, I still anticipate or I still advocate that the candlestick charts are telling you exactly what's going on in investor sentiment. BG, yes, you still use that same parameter if you're trading off the 10-minute charts, that it should be doing X and it shouldn't be doing the opposite. So where is my stop if I'm trading off the 10-minute chart? You should already have that pretty well established where it shouldn't trade. So here's the statistic that helps me tremendously. Again, if you've got the best trading strategy in the world, you're still probably only going to be correct 70% of the time. So if you're correct 70% of the time, what else should you be expecting? The 30% of the trades aren't going to be winners. They're going to be losers, yes. And so when you have that established, now at least you have a framework to keep your emotions out of your trades. It used to be when I was such a clever analyst that I could tell when a chart was telling me it's time for it to go up, and I'd get in it and it turned the other way, and I'm thinking, man, am I still so stupid I can't analyze a chart correctly? But then after a while I realized that no matter how good the charts are, there's still going to be approximately 30% of them not working. And if that's the case, I want to know where it's not working and to get out of that trade so I can move on to a chart that has a 70% probability. And there's a very simple element that if I'm buying based upon a confirmation of a buy signal, and this is the signal that tells me they're confirming control, what's this candle tell me? It's not working. Close out that trade. Why? Because it closed back below the halfway point. And this is one of the aspects you'll find about candlestick analysis, that the Japanese rice traders use very common sense parameters. That if this was the candle that told you the bulls were in control, it shouldn't close back below the halfway point or the bears are still in control. Number one. Now we've also added an element that we can recognize as being a very strong trend indicator, the T-line. So if I've got a chart that I bought the previous day and the next day it's trading back below the halfway point of this candle and closing below the T-line, I've got to, I don't tell myself, I just say, all right, this one didn't work. I don't beat myself up. I don't sit there and wait to say, well, maybe it's still going to work. I'll wait to see what it does the next day. No, I'm going to close it out and go find a chart that looks a lot more attractive. Do you sell intraday if the bearish candle trades below? No. I want to see, I've got two parameters there, Carrie. One is I don't want to see it close below the halfway point of the previous day's candle. And I don't want to see it trade at all back below the open of the previous day's candle. If there's enough bearish strength to move it all the way back down below the open of the candle that told me the bulls were in control, intraday, I'm closing it out. Identifying the losers is critical. Art, that's exactly right. And that's where most investors kind of fall by the wayside. You got to know that you're not going to be in a winning trade every time. So part of a successful investor is knowing when that trade's not working so you can close it out immediately and go on to something else. Do these trade rules even apply when the whole market is down? Yes. Ellie, you should be closing out of a lot of positions. Remember what the price is. The price is the accumulative knowledge of everybody buying and selling during a specific time frame. And if that time frame is being influenced by the market, you just logically say they're selling because the market's selling off. But what's the important statement in that statement? That's not the right way to say it. They're selling. Doesn't matter why they're selling. Could be the market. Could be anything else. You're just identifying that they're selling and you don't want to be in that position. Oh, TT, the two conditions. I forget what the two conditions are. Oh, the two conditions. I don't want to see it close below the halfway point. Reading what is the date of your chart? I don't know. And it doesn't really matter. Oh, this is an old chart. I mean, this is just for example. We'll go to the live charts here when we get done with the. So it doesn't matter. A lot of Pat's always telling me you need to update your charts on some of your videos, and I always have to remind her it doesn't matter. This chart could be 20 years old. This chart could be 20 minutes old. But it's the point of it is that investor sentiment works the same way time after time, no matter how. So illustrating something doesn't matter whether it's an old chart or a new chart, and that's why. No, this is not a current chart. We will go to the current charts when we get done here. Do you enter on the open of the next candle? On the next candle of where? At. If this is my buy signal, a morning star signal bouncing off the 50, and it opens positive, confirming that the bulls are in control, confirming my signal, and telling me the T-line's not acting as resistance, yeah, I'm buying on this positive trading day. So it closes up here. I'm pretty smart. Well, the next day it opens here and closes here. I've only got one thing to do. The second rule. Second rule is if it trades below the previous day's open, you want to close out the position. You shouldn't have enough strength to trade back below that low. Let's see. What about a reversal after a big sell-off? Would you use the T line and the candles, or do you need additional. If I could take everything off this chart except the T line and the trading and use my stochastics to be buying the signals. We'll get to that when we get to live charts. These are all just kind of hand charts just to give you the illustrations of what the trading rules. I must try hard not to have too many positions for diversification or temptations, make it difficult to track. VG, how many positions do you have on at any one time? Oh no, it's Bigalow 225. Okay, let's see. This pod, do you consider the downtrend forming starting the previous high shooting star, meaning up here? Yeah, you consider the downtrend, but notice what our analysis was. It came back to the T line or to the 50, did a Doji morning star signal and traded positive, breaking the downtrend and breaking the T line. That was a good buy. But then when it closed back down here, what did that tell you about your uptrend or your breakout? It wasn't there. Why not select more deliberate chart patterns, ones which move in 45-degree angle? And the chart patterns I see here are more zigzag patterns and harder to predict. You can, this is just, this is just an illustration to say if you, and it doesn't, yeah, we're not saying, oh, what are the best patterns to be looking? Some people like this pattern of morning star support on the 50. All we're illustrating here right now is if we were buying on this day, we were closing on this day because it's not doing what it's supposed to. So this is what we're supposed to be doing, is identifying the logical stop loss levels to tell us to be back out of a trade. And a lot of times it's the halfway point of the candle that told us the buyers were in control. So if here's my morning star signal and I'm buying on this day, what is my expectation? We should be going in this direction. I should do this slowly. In this direction. It opens lower and comes back down through the halfway point. I'm probably closing it out at that point because it's also back below the T line. Or definitely if it closes anywhere down here below the T line, you close out the trade. Whoops, I didn't scroll fast enough. In the two conditions of stop losses, you just mentioned, what is the T-line rule? The T-line rule is, what about the T-line rule? Yes, you still use the T-line rule. If you're closing back below the halfway point of the candle that told you to be a buyer, and it's back below this level, and you're back below the T-line, that's double reasons to be out of that position. Okay, hold on. I'm checking to make sure. Okay, Matt, you're in. All right, good. So that's not a hard statistic to remember. Remember, you don't have to know any formulas in candlesticks except for the number 2. And that means usually your signals like the hammer, the inverted hammer, the shooting star, the hanging man, the body, or the tail should be 2 times greater than the body. And then the other 2 is the halfway point of candles. So the first thing you should be analyzing is, why am I buying? We got a buy signal, and it should be moving in this direction. So simple logic says if it's closing back below this level, it's not moving in that direction. So every signal or pattern that we look at, we should have expectations of which way it should be going. And then we should have confirmation. Let's see. So the rules are if it closes below the previous day's close, or if it trades below the previous day's close, either way, close it out. Yes. 25-ish VG. Todd, are you in here? Todd said he would have 70 trades on. And remember, Susie Orman said you should never have any more than 4% of your money in a trade. Well, that means you have 25 trades on. I always come back with the illustration after being a stockbroker on Wall Street that most analysts on Wall Street have a hard time figuring out how to analyze 6 or 8 companies. How, as an investor, you're going to be able to analyze 25 every day. So I keep mine at 10 because that I can look through 10 charts very quickly, meaning probably in less than a minute and a half, and see which ones might have to be closed the next day. And each position is big enough that it's going to be a significant factor to my my profitability the next day. But it's small enough that if something devastating happens in one of those positions, it's not going to kill my portfolio. Going based upon the probability factor that I know that on any given day, out of 10 positions, probably 6, 7, 8, possibly 9 are moving in the right direction. So if one's getting obliterated, it's not killing my portfolio. Jake, I helped write some of the formulas for Heiken Ashi for a group of investors in Texas years back. But Heiken Ashi is more of a vanilla method of trading candlesticks. Use the signals and the T-line. You'll come out much better ahead. Ernest, I would still cut that almost in half. I found that when I had so many positions on, I got a little bit lazy. I'd think, oh, that one's not doing well, but it's only one small position out of all of my positions. I'll give it some more time instead of it being big enough to say, I better, because it's going to affect my returns. And 10 positions isn't so undiversified. And if you're sitting here trading and you're watching it, Connie, that's way too many positions. Unless you're a multi-millionaire. And if you are, I'll give you a number. Let's see, all worthy illustrating here right now is, and on these days, we are closing on these days because they're not doing what it's supposed to be doing. Yes, that's kind of your main. Oh, even options, that's way too many. If I'm trading options in stocks, I've got 10 positions on. And let's say it's a $250,000 portfolio. That means I've got 10 $25,000 positions. Now, if I want to trade options, maybe I take one of those units. Now, the reason I have them in equal dollar units is because every time I put on a trade, it's a unit of my portfolio. It doesn't have any emotional attachment. So, and I know what happens that if I say, oh man, this one's a good one, I'm going to put 40,000 into this one instead of 25. You can bet dime to donuts I'll spend 90% of my time watching that position versus all my positions. Yeah, if somebody has over 200 positions, that's kind of crazy. The difference between a stop and a stop limit is if I've got a, let's say I've got a stop right here or just below this level. telling myself, all right, if it comes down through, I can't see the number, but let's say if it comes down through $25, I want to be out of this trade. That's my stop. Now, if I put in a stop limit, it says if it comes down to $25, I want to sell it at $25, which means if they gap it down through my stop, they can't sell my stock at $25. I'm still short, even if it goes all the way down here. So if you're going to stop out of a trade and it comes down through your stop, get out of the trade. The stop limit says I'm going to get out at a certain price, and that's the price I want. But if they can't do it, like it gapped down through or it hit that your stop and then the next trade was lower and they couldn't sell you or sell your stock, you're still in that stock heading in the wrong direction. DD, that could be too. If you've got long-term accounts sitting or long-term positions, you might have some over in there and then decide how much you can watch as far as short-term. On the top of your memory, for a 10-position portfolio in a particular bad week, how much percentage of your portfolio do you lose? Well, Carrie, just because I have 10 positions on doesn't necessarily mean I've got 10 longs or 10 shorts. We'll do a money management process, but what that means is when we go to live charts, if I can see the market's topping long positions on and 2 short positions, and I see the market start rolling over and I'm taking profits in 1 or 2 of my long positions, I might be more apt to put that money back into a short position, or maybe 1 short position and 1 long position. And as I'm closing out longs because the market's rolling over, I'm adding short positions. So it's not like it's one day I'm long my portfolio and the next day I'm short my portfolio. It's kind of an evolving process. Does this work for currencies as well? Yes. This candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether it's stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. The way of trading now. BG, yes, get yourself down to a reasonable amount of positions where you can analyze them. Okay. Please analyze the chart back about 9 candles, the congested area. Here, we're not analyzing these charts. We're just showing examples. I've got other charts right now that we'll analyze live. How do you find stocks? I think you said you look at biggest movers. Yeah, Jake, once you set up your scanning, if you're not familiar with candlestick signals, it'll take you less than 20 minutes each day to find the best trades. If you are familiar with candlestick signals, it may take you 7 to 10 minutes to find the best trades each day. How do you utilize scanners? That Blake, we can do that on a scanning night, but it's simple. Once I set up the formula, which is very simple, that if I'm looking for stocks in the oversold area, less than stochastic is 20 with the biggest percent price move, more than likely in the first 50 charts that I look at, which takes a matter of 5 minutes, I'll probably have found 8, 10, 12, 15 good candlestick reversals. But that's a whole different training session. We can do that soon. All right, so here's the point of this, that if this looks like a very good chart, lots of indecision, lots of dojis, bounces off of 50, closes above the T line, I'm going to be buying on positive trading the next day. Well, in this case, I wouldn't, but let's say I did, based upon this nice-looking chart. And then the next day, it closed back below the halfway point of this candle and the T line. What's this tell me about the bullish strength? Obviously, it's not there. You close out the position. So this is not rocket science. If this is a good bullish chart right here and it opens positive, you're buying. I say you, me, buying. It's trading up, came all the way up to the first resistance level. Where's a logical place to put a stop? Back at where it opened, because logic says if the sellers can bring it back down through the open of where the bulls were taking control. No, CB, it's not rocket science. That means the sellers are still in control, close out the position. I used to sit there and say, oh, this was good, and it did what I was supposed to. I'm going to wait to see what it does tomorrow, instead of saying, let's close it out. Maybe this will be good tomorrow, and I can buy it back. But why wait? Each night I'm going to find 3, 5, 10, 15, 20 good trade setups. If I've got one that looks iffy and it didn't work, close it out. Now, again, I used to say to myself, oh man, am I so stupid? I had a good chart here. I was buying. What do we know about the Doji rule? The price will usually move in the direction of how they open after a Doji. So even if I'm not in the overbought area and they're gapping it down, I'm closing it out as soon as it comes back below the T-line, because what's it telling me? It's not going in the right direction. When it works, yeah, that's on the rocket side. Are you paying brokerage on each trade? Yeah, but it's, I'm using Thinkorswim, and it's not very big. So, again, the brokerage fee shouldn't even, that's part of the playing field. So, not even anything to take into consideration. So, here's what you have to realize, that if you're in a bullish trade, you have expectations of where it should be going. When they gap it down, my first, there's no commission, though. I'm trading commodities a lot, so it's usually you have to pay some fees. But here's what happens is, it used to be that when I was in the right trade, I'm thinking, boy, good, great. And then the next day they gap it down. My first thought was, oh, man, maybe they'll take it back up so I can get out of this trade. But what I've learned is if that chart isn't doing what you're supposed to or expect it to be doing, you can go on to a chart that is doing what it's expected to be doing. So if I'm buying with the anticipation we should be heading in this direction, they shouldn't be trading it back down below the T-line. So for two things of using that T-line. One is it's not going in the direction that we thought. And two, if they close it here, what's happened to your trajectory of this chart? It's gone flat. It's not going in the direction you want it to. So logic says, if this is what I was expecting, and now they've gone flat at best, close out the trade and go on to something else. Same scenario here. The T-line rule. If this is the way it's supposed to be going, they shouldn't be closing it back below the T-line. My probabilities have gone against me. Close it out. Can you repeat your response to stop loss and stop limit? A stop loss just says that if it comes back down through let's say you were in this one, and I can't see the number, but let's say it's 1550. Let's say you put in your stop loss, and if it trades below 1550, you want to close it out. Well, this one gapped down to 1520. Well, on a stop, that would have closed you out at 1520. If you put it in as a stop limit, that would have said if it trades back to 1550, I want to close it out at 1550. Well, when they gapped down through 1550, they couldn't, or through 1550, 1520, They couldn't sell you at 15.50 because it was already at 15.20. So you're still long this position because you wanted to get out at that stop limit order, meaning at a specific price, versus just saying, if it comes down through here, just get me out of this trade. So a stop says, just get me out of the trade, and that's the whole purpose of a stop order is if it's moving in the wrong direction, it doesn't matter whether you sold out at 15.50 or 15.45 or 15.20, you want to be out of it. So hope that answered that. Doesn't the overall market downturn affect a good chart and no, it doesn't provide misleading signals. Remember what the chart is. It's the reflection of everybody buying and selling. And if the market is selling off and they're selling the stock off, that means they're selling the stock off because the market's selling off. Oops. Okay, yeah, it might be called a stop market order versus a stop limit order. Would you have gotten back in? Maybe. But you can see what was setting up now. When it didn't do this, now it looks like a wedge pattern. I've probably gone on to something else by that time. So following your portfolio allocation in all your units, swing trading, do you use one unit for options? Oh, yeah, I didn't finish. Yeah, so if I use one unit for options, now I'm not going to trade $50,000 if that's the number you're using. If it's a $500,000 account and that option unit is 50,000, maybe I'm buying 3 or 4 positions in there. Now, that means I've got 9 stock positions on and maybe 3 or 4 other positions. So I've got 13. I can still manage that. I don't want to be up at 20, 25, 30 positions. That's just way too many to try to manage. On a day like today, you are at least 50% in cash and a few shorts and just 1 or 2 longs, yes. And my longs right now were in spreads, so they weren't drastically affected. What criteria do you use for skinny stocks such as bullish harami? They'll all come into play when you see them. What criteria do you use for scanning stocks such as you can either scan for the signals or you scan for the biggest percent price moves and see what signals they produce. How does stop loss if market goes lower in out of market time? Yeah, meaning if next day they gap it down, if you've got a stop in there, it should kick it into effect so that you're out on the open. Now, does that mean sometimes they gap it way down and you're stopped out and it comes back? That's depends on how much time you're spending near the computer or setting up your stops so that that's all part of the playing field. Why market is selling off? Can you reverse engineering? MB will do that when we go to live charts. George, yeah, but that is if you've already set in your mind that not every trade is going to be profitable. So what are you trying to do? You're trying to have majority of your trades profitable. When you get into a trade, what are you looking for? To confirm moving in the right direction. What you want to do is one that's not moving in the right direction, you want to get out quickly so that the profitability of the good trades are continuing and the bad trades aren't pulling down your returns. Okay. Hard to translate scans from here to stock charts. I don't know what that means. I use stock charts. I do not know how to scan with your fluidity for matter. You should be able to set up, if they've got a way to set up scans. Tom, I don't know how to help you right offhand, but scanning is very simple because once you set up the scan, when it's done, then all you do is refresh it each day. Okay, so on the other side, if you're short, this is why you want to know your bread and butter bricks and mortar, the 12 major signals. Because if I'm short and I see a kicker signal setting up, what's that tell me about my short position? It's gone. So if I'm short, where do I know to set my stop? It shouldn't trade above the previous day's open. And it gaps up there, I want to be out immediately. T-line definition. The T-line is the 8 exponential moving average. Let me see if I can find a better chart to give you all the T-line is the 8 exponential moving average. Call it the T-line because it's the trigger line or the trade line, and we decided to shorten it. But a very simple statistic. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it, which means it makes your reversal signal away from the T-line that much more relevant. Okay. Yep. Yeah. So to set up your scans, what is it? McKella is saying go to the YouTubes. Okay. So if we're failed expectations, why? Oh, if this is a good buy, look at the J-hook pattern, bounce off the 50, kind of a doji sandwich up through this, and you're buying, what becomes your parameter? They shouldn't be trading it back below this level. It should be going in this direction. So this is nothing more than if I was buying on this day because it looked like it was a J-hook pattern coming out of here and it closed back here, I'm closing out the position. It's not doing what it's supposed to. John, I'm a swing trader, so my average trade is anywhere from 2 to 10 trading days. Yeah, we'll look at that one. Bill, bring that one up when we get to live charts. You said something about long leg versus body length. VJ or VG, bring that up. Okay, let me see where we are. Oh, we're still only about halfway through these. So if I bought here, because it would look like it was doing a J-hook, gapping up, and it closed back here, it's not doing what it's supposed to, close out the trade. If we get to it, and I was buying here anticipating the breakout, once it got to the fry pan bottom beginning, very simple. I put a safety stop just below the low of the doji because logic says if it trades in that direction, what's our doji rule? It's going to move in the direction how they open after a doji. If they're trading down here, what's it telling me about my breakout? It didn't break out. It's time to close out that position. So knowing what should happen after a candlestick signal and at a pattern breakout situation makes it very easy to put a stop loss situation in, or stop loss level, knowing that it should do this. If it did this, it failed to break out. If you have a trade that is working, are you a little bit more flexible with your stops, or do you put stops in on all trades? Eric, I'll usually, if I was long this, there's a fry pan bottom rule. That if you see a fry pan bottom, you can stay long as it doesn't close below the T line. So each day I might move my stop up just below the T line. In apps example, putting a stop at the lower of the Doji, would you put a stop before the market opens or the following day? Because I'm sitting here, I'm watching this, knowing that it needs to open positive. But then all of a sudden, when we wake up, we see the pre-market futures are selling off, and we can see this is selling, probably selling off. Yeah, I'll put a stop in pretty quick. When you first consider entering a trade, what time frame are you using? Daily. If I'm buying based upon a daily chart, I'm selling based upon a daily chart. And unless we're getting too far away from the T line, or when we get too far away from the T line, then I'll flip to the 10-minute chart. I'll try to show an example of that. So first of all, we're analyzing why we're buying. Signal pattern, make sure our entry is confirming, and then this all should be an instantaneous mental process. Why are we buying? What confirms our entry? And where should the trade not be trading? Now, one of the biggest fears of everybody putting in a stop is, boy, they're going to come and pick me off. Well, that might have been true if you're in a very low volume stock. But if I'm trading something and I say, I'm going to put a stop right here, and they take it down through there, that means they, meaning the market, is selling. Now, I can always buy back when I see that they're not selling anymore. Now, it used to be when they took me out and got me out of this position, they weren't going to trick me and get me back in. I'm going to go someplace else. Well, now at least with candlesticks, I know what normal human nature is. That if I got out here and I saw they were doing a J-hook pattern, I can be buying because I know what normal human action is. When you see the apps, Adam, I don't know what that means. When you see the apps is supported at the 50, down here, I guess would you hold off on closing your long position? Yes, because we don't have a confirmed sell signal. So until we see a sell signal and a close back below the T line, we stay long. Are you saying because we're above the 50? No, the T line is a extremely good indicator. If you see a sell signal and a close below the T line, the probabilities are going to go against you dramatically that you're in a downtrend. And if you see it turn around, you can always buy back because when they close back up above the T line, the probabilities have gone dramatically in the favor of this being in an uptrend. Go back to your apps chart. Go back to the apps chart. All right. Do you have a pre-built scan? Lewis, what I've discovered is if you're trying to use the scanning processes or a trading platform like Thinkorswim or somebody that's more interested in trading, your scanning capabilities aren't going to be that great. Now, I use Metastock and I use TC2000. So for that extra $60 or $80 a month, just the amount of time that you save is what pays for itself many times over. And the efficiency of finding the correct trades is much better. So we tried to set up, we've got some pre-established scans packages that you can buy to put on Thinkorswim, but it took us a long time, and it took us a long time even to figure out how to get them on and used correctly. So it's not a lot of your brokerage firm scanning software applications aren't user-friendly. All right, okay, going back to apps, what was the question? Oh, scrolled way past. Chris, then you may be invited on one night to give a session on how to set up the scans for a Thinkorswim. Yeah, so the new techniques now is a lot of people are worried about getting picked off. Now the process is that order is electronically placed at your brokerage firm, so nobody sees it, and so it just executes when it's executed. Who was asking the question about apps? Was I concerned about the 50? No, I was concerned about what was happening here. Scott, Metastock, if you're trading a lot of things around the world, the Canadian stocks, European stocks, currencies, you get everything on Metastock. Whereas on TC2000, you get just U.S. stocks and maybe some of maybe some Canadian stocks. So it's limited. It's easy to use, but it's limited on what you can scan. Oh, yeah, but we weren't, that moving from there to there, that was a good, probably 15% move. I'm stopped out there. I don't care that it's supported down here. It failed the pattern. For all we know after this, it could have bobbled sideways. All right, let's see if I can. We're going to be here for a while because we're already closing in on. So biggest fear of getting picked off, that used to be the case. Now your positions are hidden. We were writing the formulas for TradeStation, except it was put on hold, John, because of some SEC problems that they were trying to clear up. So here's a very simple rule. If you're that far away from the T-line in the overbought condition, it shouldn't trade back below this level. If you see it gap down, immediately put your stop right there, because logic says if they come back down through the big open of that candle, where's your next likely target? Right back to the T-line. Very simple. If you're trading up indecisively, there's a hammer or Doji. It opens positive. Where's a logical place to put your stop? At the low of the Doji, because logic says if it comes back down through there, they're selling. Please explain which line is which. Oh, I'm sorry, Cheryl. The blue line is your 50-day simple moving average. There's also a red line on here, not on this chart. That's the 200-day simple moving average. You have those on your charts because every major money manager around the world uses those moving averages to make their decisions. We use them to see what the decisions are at those levels. That's exactly what the candlestick charts will provide for you. Then the T line is the black line. And again, you can take everything and just simply use candlestick buy and sell signals and the T line. You trade very successful. I finally, after being the worst investor in the world and being a stockbroker for 8 years, I got out of the business. But when candlesticks came along, the thing that made it very credible was it was just common sense. I mean, anything you learn in candlestick analysis, you'll say, yeah, I knew that, or I can understand that. So the T line is a good indicator. This little green line is what we call the 3T line, which works as kind of a confirming indicator for the T line. And then I've also sometimes have the 34 EMA, which works pretty well. So this is why we always say observe the candlestick obvious. That if this is my buy signal when I bought here, it shouldn't trade back below the halfway point of that candle below the T line. If I'm buying on this day because I've got a hammer, a doji, and they're starting to trade it up, where would I put my stop? Right back here at the open, because logic says if it comes back down through there, what color is that candle going to turn? Going to turn red. What's that tell you? The sellers are still in control, and they couldn't close it up above the T line. Stop back out of that trade. An inverted hammer is one of your strongest probability trade signals out of the 12 major signals. Statistically, if it opens positive and starts trading positive, you've probably got a 95% probability or greater that it's going to trade positive, which makes it very simple. If it starts trading positive, put your stop at the beginning of that candle, because logic says if it comes down through there with a 95% probability or greater that should go this way, it's not going in the right direction. Close it out immediately. So here's the simple thing that I see when I visualize a chart. What should the trend be doing? Why did we analyze where it should be going? And what should be done when something alters that trend? And this is basically keeps your mental process clear. You don't have to know formulas. You don't have to know price percentages. It's just common sense visual analysis. And it's all based upon human emotions. That's what moves prices. The 3T line is a 3 exponential moving average. And we can go into that, but real quick, it's kind of confirms what's happening on your with your the T line. Or another way to, let's see, I don't know if I've got a chart on here that would illustrate it. But if you see a buy signal and the 3T line comes up through the T line, that's just little added confirmation that the bulls are now in control. If it came up and the 3T line wasn't going through, then you'd have a little bit more hesitancy about the strength of that reversal. Okay, I went through some of those questions pretty quick. Hope I got was there anybody's question that I didn't answer clearly? Blake, that's what I always tell people. That's why I keep saying this isn't rocket science. This is just common sense put into a graphic depiction. Yeah, if I'm in a uptrend or even a downtrend, yeah, I'll put a trailing stop. As soon as I get into an overbought condition, my trailing stop will be at the previous day's low. Trailing stop, not a percentage. It's just, yeah, again, at the previous day's. So if I was long this one, I would have put a stop there on that day. If I was long here, and even if I saw this moving like this, I immediately put a stop right here. In Metastock, which Explorer to use? Yes, I don't know, the Doji, Dynamite. Oh, yeah, the Doji Dynamite is what they put out quite often. And we could do a whole session one night just on all the attributes of a Doji. I mean, instead of trying to learn, you still learn all the 12 major signals. Those are your ABCs. and the patterns. Forget what the question is. Oh, I tell people that once you learn the signals, now go and maybe 4 of the patterns. You'll always have more trades than you'll ever be able to handle, and that way you become an expert at what's happening versus reacting to what all the news is around. Oh, is that what's happened, Art? I turned off the TV, which I usually have on mute. So what am I going to do? Stops. Here we go. We recommended BB today if it opened positive and traded positive. It opened and we wouldn't have gotten in it because what did it do immediately? It started trading off. However, if you did buy it with the anticipation that this bullish signal is confirming above the T-line, the fact that it closed back below the T-line would have told you close it out. This is not trading in this direction. How the heck can I not? Oh, U.S. Steel. U.S. Steel, same scenario. That's a good looking chart. You could be buying on positive trading. So if you bought on positive trading, where should it not close? Shouldn't have closed back below the halfway point of this candle. Where shouldn't it trade at all? Back below the open. So once this opened up and started trading lower, probably would have closed it out or should have closed it out. Definitely should not have let it trade back below here. And if you held on to it where it did a bearish engulfing signal, trading below the T-line, you definitely would have closed this one out. CRMD, we were holding long because up until today, it was still trading positive. So where is our stop? Our stochastics aren't showing anything good. Our stop was it shouldn't close below the T-line. We would close this one out. Yeah, usually you're going to tell, if I see the market opening positive and the stock opening positive, probably within the first 2 minutes, you'll know that they're trading up positive and you can get in. If the market's opening lower, maybe it would take 5, 10, 15 minutes to see that they're actually trading a stock positive. Here's a bunch of places where if you were long NVIDIA, when it closed back below this level, the probabilities started going against you. If you held on to it, said, I'm going to give it one more day, and it traded up here, okay, but then your stop was right here. It shouldn't come back down through that level because logic says if they've got enough selling pressure in the overbought condition from the T-line, that they're starting to sell below those levels, you want to be out of that trade. And do you handle a gap up any differently than a normal open? Yeah, gap up is very beneficial, meaning your best friend is a doji followed by a gap up. That's showing now a gap up in the oversold area is a good place to be buying because not only does that tell you that you have a candlestick reversal signal, but the buying is intense down there, or exuberant. That's exactly where you want to be, is a candlestick signal in the oversold area with strong buying. On the other hand, if they gap it up at the top in the overbought area, the Japanese rice traders tell us where do most people buy. They buy exuberantly at the top. A gap up in the overbought area tells us, all right, immediately start looking for profit taking. How do you translate stop limit to a stocks call option? Ron, the only way you can do that is what they is a contingency order. That if you put a stop in and says, if this stock comes down through 50, close out my calls. The only problem with that is they're going to close out your calls probably at the market, which means you're going to get out more at the bid side than somewhere in the middle. Is the T-line the 8 exponential moving average? Yes. And these are all daily charts, but this could be a 5-minute chart, a 10-minute chart. It could be any time frame. So this is where if I was long, I would have stopped out here, or if I'd said, I'm going to give it one more day, then my stop was right here. Amazon. Somewhere I was, let's say we started buying here. Where was our stop? Definitely right here, and it shouldn't have closed back below the T-line. So not only does a close back below the T-line dramatically improve the probabilities you're going to be heading in this direction, but you can also see what it does to the trajectory of that trade. If we're anticipating it should be doing this, then all of a sudden it's doing this, it's not what you want. Close out the trade. CAN. A lot of people were asking, or some people, we made very good money on CAN. But look what was happening when it came out of this fry pan bottom. What was starting to happen up here? We're starting to see gap up exuberance in the overbought area. And then there was your bearish Harami Doji. That alone should have told you probably want to take off half the position. The next day when they gapped it down, you wanted to take off the other half. Should have taken off the other half. Now we had some people saying, should we be going long? And the answer is no, not until you see something that's definitely telling you're in a buy situation again. This was not very decisive. Why is it a bearish Harami Doji? Because a Harami opens and closes inside the previous day's open and close, and it's a Doji. And what's a Doji or what's a Harami tell you? The buying has stopped. So that's, again, one of your 12 major signals. So it could be things. It could be a Doji and or a Doji Harami. Doesn't matter what you call it. Is there a bullish Harami? Yes. That's at the bottom of a trend. We'll see if we can find one. Yeah, so that question there says, just take the time to learn the 12 major signals. I guess the best place to get one of the books, the High Profit Candlestick Patterns, is on our website. You read that, and it pretty much tells you what the strong signals are, and it tells you what the strong patterns are. And close more than halfway down the candle. Did you close out there? I wasn't in this one, but a lot of people in the room were. But yes, should have closed this one out because it actually opened down here and started trading up. The fact that it closed as a Doji in the overbought condition as a Doji Harami would have told you close out at least half the position, if not the full position. And so this is the type of thing that when we follow them each day in the chat room, I would have said close out this position. Does the upper wick signal? It doesn't matter. Yeah, I told you that the bears were losing. The fact that they closed it right here as a Doji was what was your important factor. Okay, and so we were making good money on FR or FPR T. Did I say that? FPRX. Same scenario. As soon as it came back down through this level, it was creating a bearish engulfing signal. Even though it didn't close below the T-line, you got a bearish engulfing signal, stochastics rolling over. It was a good time to close out the position. Is CAN ready for a short? It could be. Probably could short this on weakness. What is a stronger signal? What is a stronger signal, the T-line or the candle as a harami? The signal. Remember, the important factor on all of this is the signal first. Everything else is a confirming indicator. The AMC was in inverted J-hook pattern or scoop pattern, but today it went down. What would you do tomorrow? I don't want to get off on these. It better open positive. You still got the fry pan bottom. Better open positive and start trading positive. If it opens lower, probably would close it out. Okay, some more here. So, this one had been acting well, but then we had a hanging man type signal. So we would have closed this one out today, even though it didn't close below the T-line, because the whole market was selling off. And worst case scenario would be if it opens positive and trades positive, you could always buy it back. Marshall, yeah, it doesn't really matter what they do after hours. Blue ice failure? Not necessarily, no. A blue ice failure, this was just hovering here. This one is a blue ice failure. Let me make this smaller. Lumber liquidators. They fell through the ice. There was a big evening star signal, fell through the ice, came back up to find the hole they fell through, couldn't find it. They drowned, so they're heading for the bottom of the pond. That's a blue ice failure. So you look more for candlestick sell signal than simply close below the T-line to make the decision. Yes. The strongest sell is a candlestick sell signal. There's kind of your shooting star failure at the 50 and a close below the T-line. Now, if it hadn't closed below the T-line, probably wouldn't do anything with it until it does close below the T-line. Again, the T-line becomes a confirming factor. Today, this one was stopped out at where it closed yesterday. This is a kicker signal, very strong signal. But when the market started selling off, that was a good place to close it out. Just a logical place to close it out. Tesla. This is, I wanted to show this right here. Notice that your uptrend was still in progress. Oh, I goofed that up, didn't I? Right to there. Kind of a doji that closed right on the T-line. What's our doji rule? It's going to move in the direction of how they open it. So if they opened a positive, it told us the T-line was still acting as support. The fact that it opened lower could have set your stop at the low of the doji, because if it came down through there, you wanted to be out of this trade. Carry, I think it, whenever, I don't know what this level was, but you'd be able to see it, that if you're on a lot of charts or a lot of your watch lists, it would be up, it would be up, it would still be up, it would still be up, it'd still be up, but as soon as it hit zero, meaning that was the time to kick out of it, because at least you could see at that point which direction it was moving. Things like space. When they trade up and they gap down, that's a bearish harami. Joy, yes, I'm out of QS. I've got a couple spreads that are still, they aren't very expensive in the first place, and they are still about the same price. So I'm holding on to the spreads just in case they all of a sudden pop it back up. But I can pull it up here. But notice where this harami occurred. Down near the bottom of the previous day's trading. And closed below the T-line. That would have told you the bullish strength isn't there. Close out the position. Would you use a 10-minute chart for closing out many stocks that may have run? Yes. So when you're too far away from the T-line, the only example I have is right now that I can think of is Tesla when it moved too far away from the T-line. Blake, no, I don't need to use volume because my universe is stocks trading greater than $5 a share and trading more than 200,000 shares a day. The only time volume comes into play is if I see a reversal signal and it's got huge volume, that tells me there's probably been a lot of change of ownership. But volume has nothing to do with price. A lot of people say, I want to see the volume go up as the price goes up. If nobody's willing to sell you stock, the price is going to go up on lower volume. Yeah, hold on. Let me go through the ones, and then we can go back to some of these. This one, with it moving up, look how far away you were moving from the T-line. Now, on that day, you might have moved up to your 10-minute chart, and the 10-minute chart will look exactly the same as this. And when the 10-minute chart starts selling below the T-line, the daily chart up here, the reason we're using the 10-minute chart is because we've already had the alert that we're too far away from the T-line. That gets you out up here versus down here somewhere. So today, this had a good-looking chart. SCKT had a Doji gap up. That's your best friend, and started trading up. So if you bought in here, as soon as it came back down through the open, that's a good place to put your stop, because if it came back down through there, who's in control? This bears. You want to close out the position. That doesn't become a good-looking chart. We recommended AFA. What is your question? Yeah, so AFA didn't execute today because it didn't open correctly. It opened flat and immediately started trading. PLL was another one that if you bought this one, it didn't come back. I'm colorblind, so it didn't come back down through the open. But had it closed below the open, where would it have been? It would have been back in this range. So what do you do on this one? You put your stop at the open, because logic says if they trade this lower tomorrow, you're back in this range. You didn't break out. The NTX. This is another perfect example. It said if you bought on this day because you had a nice bullish candle traded up, your stop, if you were buying up here, your stop would have been at the open, because as soon as it came down there, what color was your candle? Starting to turn red. You definitely would not have kept it, or you would have closed it at the end of the day because it closed below the T line. Same scenario right here. Another good buy signal. Traded positive. Where did you not want to see it trade? Back below the open, and definitely back below the T line. You would have closed this one out also. No, we're not paying attention to slope. We're just using the T-line as the T-line acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. Do you pay attention to the slope of T-line when it remounts to determine chance of failure? No. The statistics are if it closes below the T-line, the probabilities are extremely strong that human nature has gone the other way. Ahmed, just hang on to, we're way past time now, and I've still got 20 stocks to look at. Diebold, another one that it had a good chart, but there's your shooting star. Even though you're not quite in the overbought area, where was your logical stop? Right there, because if it came back through there, which way was it going? It was coming back to the T-line. Not a good trade anymore. And MGM, another bearish harami. Where was your stop? Right there. Because if this is still in an uptrend, it would have to negate your bearish harami. If it came down through there, it's confirming. And where do you think it was going to go if it the sellers are in control? Back to the T-line. BRXT, I don't know why I have this one on here. Because it's the wrong symbol. No, it's BRX. X. There's something wrong there. It might not. Okay, so shorts. Why are the shorts working? Because as soon as you see a close below the T-line, the probabilities, I would probably have sold, yeah, when it came back down through the open, especially with the market selling off. Thank you, Marshall. But as soon as this closed below the T-line, the probabilities were heading in this direction. Where was the first target? Right here. When it failed there, where was the second target? Down here. So those are the type of things we look for. Because once they're through the T-line and they're in a downtrend, where do most people sell? They start panic selling at the bottom. That's where you're going to make a lot of your profits on a short sale. This is exactly, again, why we identify the various patterns, the blue ice failure, because that's likely the target everybody's watching on their charts to see if it's going to go to that level. So we shorted this one. You can see what's happening here. Wave one, kind of your dumpling top, and notice what they haven't been able to do. They haven't been able to get this back up above the T-line. Where's the panic selling start? The further they move down, where's your next likely target? Okay. Do you do as well on shorts versus longs? Yes. Candlestick signals, again, are the graphic depiction of what's going on in human nature. Where do people sell? They panic sell at the bottom, so you stay short. Where do people buy? They buy exuberantly at the top, expecting from your long positions. Is this a blue ice failure? Not really, no. A blue ice failure comes down through, then comes back up and fails. This is more just kind of a dumpling top. We've been short this one for a while. Ever since they couldn't get through this level, then they closed below the T-line. Then it was very simple after that. You just stay short until you see a buy signal. ODP we recommended today because there was your bearish best friend. There's your Doji gap down. What's the Doji tell you? Indecision. What's the Doji rule? They're going to move in the direction of how they open it after a Doji. And what's a Doji gap tell you? There's a lot of force to the downside after that indecisive day. So it's sitting right here. If this opens lower tomorrow, might be filling that gap. Looks like there's a wee little teeny gap here, but you've got the prospects of it heading down to the 200. We also went short on this one this afternoon. Good X or good RX. Same scenario. Look what happened. This is why the T line is so important. The reason the T line is so important is they came right up basically to the T line, failed and went down. Now, why is that relevant? Because nobody has the T line on their chart. That is a graphic depiction of a natural support and resistance level. What's the best mechanism to short a stock? No, you buy puts, Ron. You're buying when you buy a put, that means you're looking for it to go down. If you're selling a put, that means you're anticipating stock's going up. But you could either short the stock by just selling it or buy puts, whatever anybody's comfortable of doing. Let's see. Must is cause it's happening with iPhone too. I don't know what that means. When you buy a puts, you usually allow for 2 weeks. I don't go out that far because I'm buying whatever I think the price move is going to do right now. So I might go out 2 or 3 weeks. If sometimes when there's only monthly, maybe the monthly is 5 weeks out. If that's my only opportunity, that's what I'll go with. The T-line is the 8 exponential moving average. If it is best to buy puts around the money, that's up to each individual too, Curtis, of how much risk reward you want to do. You can buy at the money, you could buy in the money, which is more conservative, or you could buy out of the money, which means it's going to have better returns, but it's got higher risk. It has to get to that. On iPhone, we all got kicked out of chat. I don't know why that. I don't have the answer to that. We recommended going short on this one because of the Doji gap down. If it opened lower after this Doji, which way was it heading? Probably at least down to the 50. Now, did we know that the market was going to sell off like it did today? Definitely not. But we had that suspicion, and I'll get to the Dow chart. So here's space, and they apparently are, their earnings weren't as expected. It was trading right down here on the 50 after hours. Have I gone through this many? VAPO is exactly what we're looking for. Look at the sell signals, the close below the T-line. They couldn't close it back up above the T-line. Look at, again, where they took it up to yesterday. Right smack dab to the T-line. Why not sell a call too? You can do whatever strategy you want to do. But now, when do you start looking for taking profits on a short trade? Well, if they're gapping down in the oversold area, what do the Japanese rice traders say? Where do most people sell? They panic sell at the bottom. That's where you start looking for buy reversals. And PGNY, that's a bearish kicker signal. So if this started trading weaker, that's a good reason to start shorting this one. Is there any information on historical option values? I don't know what that means. There is a Black-Scholes program that will tell you tell you what the value of an option is compared to what its historic data or historically what it does with the price trend. I make these recommendations. The option trades, obviously, Blake is in our options room, and the stock trades, which could be an option trade or a stock trade, in the regular picks area, members picks area. So the bigger the signal, the more compelling the investor sentiment is. Is this recorded and available for later view later? Yes. Trying to go through these as quick as possible. Since we're way over time already. So here's another one that you could be going short. Notice what they did yesterday. They failed right at the T-line. Couldn't get back up through the T-line today. First target, second target. We did can and tap. There's your bearish kicker signal, which usually means there's still a lot of force side. On the long side, which there weren't that many, STSX, apparently good earnings. Look for a 45 degree to come off of here. What is that? BXD? Nope. Whose handwriting is this? That's my handwriting, and I still can't read it. That's just great. This one, trying to do a fry pan bottom. If the markets come on strong tomorrow, that little fry pan bottom, Bob will break out on a positive open. That one can be bought. And quick, another one that could be doing a J-hook pattern. CGIX, same scenario on this one. And Jounce. So these are all possible longs if the market comes up tomorrow. However, when you see a situation like this, notice how indecisive the market has been for the last 3 weeks. Lots of dojis, hammers, shooting stars. Then they took it up. Then when they take it back down, that's usually your top. I would suspect they're bringing the Dow back down to the 50-day moving average. The NASDAQ, as you saw, when the Dow was trading tentatively, they took this back down below the T-line. This is the one basic rule that you can use with candlestick signals that work extremely high percentage of the time, is if you see a close below the T-line, the probabilities of the trend going lower is greatly enhanced. What was the bearish kicker you showed before? Oh, I don't know. NTAP? NTAP. Thank you, Dennis. All right. A database of listed historical option daily trade values, just like a broker has for stocks. Any information? Yeah, I don't know what that would be. I have a stock that looks horrible on the daily chart, but very bullish on the 30-minute. Well, the 30-minute chart is gonzo as soon as the day ends. Because remember, each chart you're looking at on an intraday basis is based upon investor sentiment during that time frame. The investor sentiment will be completely different 12 hours from now when they open up the markets. What is the stock, Lenny? Don't do naked options. Sell options. You'll get burnt. Better off doing spreads. Yes. We do, we'll probably be doing another option trading strategy session on a Saturday, not too far out in the future, but basically, essentially, we're putting simple option strategies to the appropriate signals and patterns of what strategy you probably want to use. Is it too late to get in something that's already gone down that much? Well, you know the force is going in that direction. So no, it's probably, if they still if they're still selling it, they're selling it because of that signal. Lenny, the answer to that is look at your big dark cloud in the overbought condition, and that would have been your sell signal. The fact that they're trading below the T line and you're still not in the oversold area says I'd be out of this. The worst case scenario is you can always buy it back on the next buy signal. But right now the statistics or the probabilities are pretty much against this going anywhere at this point. You have 50 MA, then 200. I don't use the 100. I don't know why the 200 isn't showing up here. Maybe it's not even on this chart. It should be. No, 100, again, the less we put on our chart, the more relevant the signals are. I mean, the whole point of analyzing the signals in the first place is that is the reversal signals. Everything else is just a confirming indicator. Henry, that is exactly why you want to use candlestick charts. Because there's so many times when a company comes out with great earnings and it drops like a rock. Well, that's telling you that they were buying it in anticipation of those earnings maybe, and or the great earnings weren't quite as great as everybody expected. What chart are you using on which website? This is actually CQG, which we don't recommend because I pay about $1,400 a month, but it's fast, it's clear, it's good for these type of sessions. But you got just as good charts on Metastock, TCNet, whatever. Yeah, usually you can set up your charts on any. They're all the same, or couldn't be set up the same. It could be considered a bearish scoop pattern with that flat handle, but I would suspect they could bring this all the way back down to the 200. Yeah, candlestick signals are the graphic depiction of everybody's decision, not their prognosis, not their expectation. It's what their actual decisions are. Is there any training on trading earnings dates? Not really, but there's just a simple factor that if the chart looks strong going into earnings, that means the people that know what's going on are probably buying going into earnings. If the chart looks iffy, this chart looked iffy. It looked good early in the day, but came back here. Now the stocks, after earning, is trading down here somewhere. Oh. Becky, do we have, or Jim, do we have a link to where they can get to the, oh, there it is. Jim put it in the store. Yeah, we've got about 30 or 40 training videos, which obviously are discounted to members. And we will be doing a training next, or on March. March is the next month coming up. March 6th is what we call mini training. It usually lasts about an hour, hour and a half, sometimes 2 hours if I get talking. But it's going to be on the power trades, which is kind of convergence analysis where you might have 4 or 5 different bullish confirmations on a on a trade. Okay, any other general questions on candlesticks? If candlesticks are the graphic depiction of human sentiment, why is the daily chart the only worthwhile time frame to make decisions? It's not. It's how you want to set up your trading. If you're trading intraday, if I'm trading hogs, I'm looking at my daily chart. Tells me, oops, right here we got a J-hook pattern. I should be trading positive, or probably trading more to the upside. Then I might trade off my 10-minute chart, which means there's where it opened. How long did I stay long on this one? I could have stayed long all the way up to where they hit the limit for the day. So that's a 10-minute chart. If I want to trade a little bit faster, might use a 5-minute chart. So again, the graphic depiction of human nature for any time frame could be 1 minute, 5 minute, 10 minute, to daily, weekly, or monthly. How realistic would you say it is for a 20-year-old to commit to being a full-time trader once they have saved up a decent amount of capital? Oh, boy. Blake, that all comes back to the nature of each person. Remember, investing is counterintuitive. That's why candlesticks work so well, because they show graphically what most people do, which is usually wrong. Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy at the top. Well, if you know that's the way people invest, then we can just turn that around 180 degrees and look for the panic selling at the bottom and looking for the counterintuitive, yes, because most people do things that think that's logic. That's what should happen. And it's usually wrong when it comes to investing. Ron, if I've got 10 positions on and they're working, more than likely a number of them are moving in a direction where all I have to do is look at them, say, yep, yeah, don't have to worry about this one today. It's still down, still down. So that may take a matter of 5 seconds to analyze that chart. So it's not like I have to spend a whole lot of time. Now it gets down here, I might say, all right, I'm going to look a little bit, watch this a little bit closer. But most of them are usually moving in the direction. So out of 10 positions, maybe 6, 7 of them are doing what they're supposed to. It means I only have to look at 3 to see if there's anything that needs to be changed. It's a buyer's market right now. Well, not yet. I wouldn't be buying this market yet. I think this market is, I'm predominantly short right now, because that is a big reversal. That's human nature. They bought exuberantly at the top. Now they're selling hard. That usually implies there's going to be more downside. Yes, pre-market. So if I'm anticipating that they're going to be doing some selling from here, well, if I wake up and the pre-market futures are up 400 points, I'm thinking, all right, maybe I better take a look at this, see what's happening. But if the pre-market futures are showing the Dow is going to open up down another 80 points, that means that's more than likely that's happening. And it's only good projection or prediction about 10 minutes before the market opens. Prior to that, futures can swing around tremendously. Yeah, so back to your question, Blake. I wouldn't necessarily jump into maybe doing it full time, but I always tell my members that if you've got kids, sons, daughters, nephews, they should be learning candlesticks first because logic is built into the candlestick analysis versus the Wall Street mantra is you just buy good companies that have good management, good sales, good market, so you always make money. Well, if you own stocks in 2007, your good quality stocks weren't worth a hill of beans in 2009. Yeah, so that's another thing too, is you can look at different sectors and say, well, they're acting well. However, look at Occidental today. Let's get this out of here. Had a big kind of bearish Harami. So if this opens lower tomorrow, you want to be out of the oils. Now, crude oil has stayed up pretty well. It's still up here at the 63. So it's still staying above the T-line. So buy some at this dip in the market. RC, you don't know how far this dip is going to go. So the old rhetorical question, when do you grab for a fallen knife or for the fallen knife? Well, usually you're going to get some sort of signal that tells you the buying has come back in. That's true too, yes, Lenny, that I tell people, poster, got a 2 foot by 3 foot glossy poster of the 12 major signals that every American family should have that hanging up in their living room. That doesn't go well with some of the spouses, but yeah, gold and silver, you've got just the same capability of analyzing which direction that is going. So you can see right now gold is still in a downtrend. Silver, pretty much going flat. So not trading that sector right now. All right. Hold on, RK, until, okay, Jim, go ahead and do the double line. And everybody limit your requests to 1 tonight because we're way past time frame. Yeah. Dang, that didn't work. The Chicago Merc, still trading higher. You're in the overbought area. So if I was long and you were moving that far away from the T-line, you put your safety stop at today's open. XPEV, not a dumpling top. That looks like a wave 1, wave 2, wave 3. I don't know if there's, no, a dumpling top is a rounding top. That's just a reversal. Kraft Heinz, now that would have been one that if I bought today, based upon the J-hook pattern, look at your bullish left-right combo right off the T-line, traded positive. As soon as it came back down through the open, I would have thought, we're not buying, close out the position. Mid, you can stay long on this one. This is a scoop, not so much a scoop, yeah, a little bit of tendency of a scoop, but you can see the little mini kicker type signal. Then you can see the Doji sandwich breaking out through this level. So right now I'd stay long, and I'd probably just use the T-line as your stop. Oh, Jake. That's way more than 1. MOTC. That's not even a symbol. That's a J-hook potential. GRFS. Now that's your best friend signal. Doji gap up. This one can be bought on positive trading. and then just simply use the T-line as your stop. And Geo, that's your cradle type pattern. There's your headboard, there's your bed, there's your footboard. This one can be bought with the expectation that it's on strength that could come back up to the T-line. Where can we get a poster for our grandkids? In the store. We got a lot of high-tech stuff. We've got flashcards. We've got a mouse pad with the 12 major signals on them. And we got a poster with the 12 major signal. Nice glossy poster-sized poster. Oops, I don't know where that went. This one, you stay short. Notice that gap down. And Tigger, you stay short. Notice the Doji gap down. The Candlestick's not in the oversold area yet. And RDFN, another one that you want to stay short. And Cliffs, did Cliffs announce bad earnings? That's kind of a kicker type signal. Rounding top, I would suspect your first target is back down toward the trend, which is getting you close to the 200-day moving average. If you're looking at silver, we can go right to the commodity itself. It's trading flat, which means your silver that's pretty much a nothing chart. I wouldn't be long or short on this one. This Allied Bank, that one I would have closed out today because that's now a nothing chart. The banks don't trade very well, and I'd probably even be going short with the anticipation they could probably bring it back down to the E-line or whatever that was, 50. Cost I would hold, but I'd put a safety stop just below today's low. Workhorse popped up a little bit, I guess, on the news that they're going to contest why Oshkosh Trucks got the contract with the government. So probably wouldn't trade this one way or the other. Nothing there to really sink your teeth into. This one, probably nothing. I wouldn't be long or short. I would have covered the short position today because it bounced off the 200, but I wouldn't buy it until you see a strong signal above the T-line. Amazon couldn't even hold the 200. The Candlestick's still heading down if you're short ever since the bearish engulfing signal. And then the gap down that tells you there's still a lot of selling. I would think they could possibly bring it down here into that trend. I haven't traded the cryptos as far as the currencies, just because I've got so many things to trade now. I don't need to add more. But you always have Riot, which now, so here's another case where if you are long, you are long. Look how far away you are from the T-line. There's where your safety stop should have been. Right now, looks like you want to be short. Myra, same scenario. CCNC didn't execute today. It immediately started trading lower, so it wouldn't be long or short this one. MP was acting well, but it was trading down here. I would stay long as this kind of fry pan bottom stays above the T-line. Marriott. That was a bearish harami that far away from the T-line. If you didn't close it out today, you use today's low as your stop. If it trades in this direction, where's it likely coming back to? The T-line. And AMAT looked good, but today they started selling off. So this one should have been closed out because it closed back below the T-line. gimbal. There's your shooting star. This makes it very easy. If you're long, it has to open positive and trade positive. If it opens lower, close it out. And PXD, you can stay long. At this point, I would have my safety stop right here, which would also coincide with probably the T-line coming up. And Chevron, there's not quite a dark cloud, but another one that I'd probably put a safety stop at today's low. If it opens lower and comes down through there, they're heading back to the T-line also. CDEV, you can see how you're kind of stuck, not stuck, but resisted right here at the top of this channel. Another one that if it opened lower, it's probably coming back to test the T-line. Worst case scenario, you see it bounce off the T-line, you can always buy it back. Okay, mouse pad, yep. And then keep in mind on March 6th, we are going to be doing what we call the power trades, which is kind of a convergence analysis of improving your probabilities of being in the correct trade based upon not just having one confirming indicator, but maybe 2, 3, or 4 confirming indicators to improve the probabilities that you're in a reversal. Is this, I didn't do, let's see, Citigroup, a dark cloud. Now what's relevant about that dark cloud is look where it occurred. Right at the same level it topped out before. So if this opens lower tomorrow, that tells you they're not going up. They're starting to back off. Okay. All right. Did I get everybody? All right. We're way past everybody's bedtime. So with that, we'll see you bright and early in the chat rooms tomorrow. We'll see you then.